SoFi Technologies, they're making some serious waves in the fintech world right now. Hit a new 52-week high, actually.
Yeah.
$18 on January 23rd.
Wow.
I know. Keeping up with all the financial news, it can feel like a roller coaster sometimes. Ups and downs,
Oh, absolutely.
But we're going to try to break down what's really fueling this surge.
Right. Yeah, sounds good.
So today's deep dive, it's all about SoFi.
Oh.
We've got a whole bunch of sources to unpack here.
Lay it on me.
Their Q3 earnings report, for one.
Okay.
Some recent analyst ratings, see what those folks are thinking.
Interesting.
And even, get this, even some whispers of insider activity.
Ooh, juicy.
A little bit, right?
Yeah.
By the end of this, the goal is you'll understand not just what's happening with SoFi, right?
Yeah.
But also how their story might be a glimpse into the future of finance itself.
That's a great point. SoFi's trajectory could really tell us a lot about where the whole industry is headed.
Exactly.
But let's start with their recent successes.
Okay.
Their Q3 2024 earnings report showed a 30% year-over-year increase in adjusted net revenue, reaching a total of $689 million.
Those are some impressive numbers. And it seems like their financial services segment is a major driving force here.
It really is.
Their revenue in that area actually doubled to $238 million. So they're not just a lending platform anymore, it looks like.
Exactly. So SoFi is strategically diversifying its revenue streams.
Smart.
Which is a key takeaway here.
Makes sense.
They're also seeing growth in their tech platform.
Oh, interesting.
Up 14% to almost $103 million.
Wow.
And let's not forget their lending segment.
Yeah, right.
Which still holds strong with a loan volume of $6.3 billion.
Yeah.
What's fascinating here is that this diversified approach makes them much more resilient than competitors who are solely focused on lending.
Right.
If one market segment experiences a downturn, they've got others to cushion the blow.
That's a smart strategy, especially in such a volatile market. But it sounds like not everyone is convinced. This success story has definitely attracted attention.
It has.
But I'm seeing some, I'm seeing some mixed signals from analysts.
You're right.
Yeah.
There are contrasting opinions.
Okay.
Bank of America, for instance.
Yeah.
Downgraded SoFi from neutral to underperform.
Interesting.
Their concern stems from valuation. They believe the stock price might be a bit inflated right now.
I see.
Essentially, they're saying the market might be getting ahead of itself in terms of SoFi's potential.
That's a valid point. High growth often comes with high expectations, which can be difficult to sustain over time.
It can.
But on the other hand, Mizuho raised their price target from $14 to $16.
Right.
And maintained an outperform rating.
Interesting.
So are these opinions kind of canceling each other out?
Yeah.
How should we and our listeners be interpreting this?
That's where critical thinking comes in. Instead of just looking at the ratings themselves, we need to understand why these analysts have such different outlooks.
Okay, yeah.
Bank of America is more cautious, focusing on potential downsides.
Right.
While Mizuho seems more confident in SoFi's growth trajectory.
Gotcha.
Other analysts have also weighed in.
Oh, really?
Citi raised their price target to $18.
Wow.
And even Goldman Sachs, known for their conservative approach, increased theirs to $8.50.
Okay.
It's a complex picture.
Yeah.
The takeaway for you and for our listeners is this. Don't blindly follow the crowd.
Right.
Dig deeper, understand the reasoning behind each analyst's stance, and form your own conclusions.
That's great advice. So we've got this impressive growth story, but also some analysts pumping the brakes a little bit. This next piece of the puzzle might shed some light on things. Insider activity.
Oh, yeah.
And what we've uncovered is raising eyebrows.
Indeed.
A little bit. One of SoFi's executive vice presidents recently sold a significant chunk of shares worth approximately $156,730.
That's right.
Wait, so an executive is selling stock while the price is going up?
It's a little, yeah.
It does seem a little odd.
Yeah.
Especially amidst all this positive momentum. What could be the motive there?
It certainly makes you wonder. However, it's important to consider the full context.
Okay.
CEO Anthony Noto entered into what's called a prepaid variable forward contract on company stock.
Okay.
Resulting in a $22.4 million upfront cash payment.
I see.
Now, I know that sounds complicated.
A little bit, yeah.
But let me simplify it.
Please.
Essentially, this type of contract allows executives to manage their stock holdings while minimizing tax liabilities.
Oh, okay.
It's a common practice, and it doesn't necessarily indicate a lack of confidence in the company's future.
So maybe not as suspicious as it first appeared. But this insider activity, combined with those mixed signals from analysts, makes me even more curious about SoFi's next move.
Well, the next big event on the horizon is their Q4 2024 earnings report.
Okay, let's dive into that. What are the projections and how do they compare to SoFi's recent performance?
Analysts are anticipating earnings per share of $0.04
Okay.
on revenues of approximately $674.88 million.
That's interesting because those figures represent a year-over-year decline of about 23%.
Right.
Doesn't that seem a little concerning after such a strong Q3?
It might appear that way at first glance. However, SoFi has consistently exceeded consensus EPS estimates in recent quarters.
Okay.
There's a real possibility they could surprise us again.
So we're not necessarily seeing a slowdown,
Right.
just a potential recalibration.
Precisely. It's also important to remember that SoFi's future performance hinges on a multitude of factors, including the overall economic climate and the ever-evolving competitive landscape of the financial services sector.
That's a great point.
Yeah.
It's not just about internal factors.
Right.
The external environment plays a huge role as well. What I find really fascinating about SoFi is how they're not just competing with other fintech companies, but also shaking up the traditional banking model.
Absolutely.
Yeah.
They're challenging the status quo, and their success could have significant implications for the entire industry.
I agree.
What's your take on SoFi's strategy? Do you see them as a true disruptor or a company that will eventually be absorbed by the establishment?
That's a great question, and it really gets to the heart of what's happening in finance right now.
Yeah.
We're seeing a fundamental shift in how people interact with their finances.
I think so.
Driven by technology and changing consumer expectations.
For sure.
SoFi seems to understand this shift, especially when it comes to younger generations.
You're right.
Yeah.
Younger generations are used to doing everything online, and they demand seamless, personalized experiences.
Absolutely.
Traditional banks with their brick-and-mortar branches and legacy systems are struggling to adapt.
Totally.
So SoFi, on the other hand, was born in the digital age.
Yeah.
They have sleek apps, user-friendly platforms, and a focus on financial literacy and empowerment.
Yeah.
They're not just offering products, you're building a community.
It's almost like they're speaking a different language.
Yeah.
One that resonates with a new generation of consumers.
I think so.
And let's not forget their roots in student loan refinancing.
Right.
That was their initial claim to fame.
It was, and it still plays a significant role in their business.
Yeah.
But they've expanded their offerings significantly, encompassing everything from personal and home loans to investment and insurance products.
Oh, wow.
Their ambition is to be a one-stop shop for all your financial needs.
That's a bold vision.
It is.
But as they say, with great ambition comes great responsibility.
For sure.
This rapid growth must be carefully managed, especially in such a heavily regulated industry.
It does.
Any missteps could have serious consequences.
Indeed.
Yeah.
SoFi's success depends on their ability to maintain this growth trajectory while navigating the complex regulatory landscape and mitigating risks effectively.
Right.
And let's not forget the intense competition in the fintech space.
Of course.
They need to constantly innovate and differentiate themselves to stay ahead of the curve.
You mentioned acquisitions earlier.
Yes.
Could that be a key part of their strategy going forward?
It could.
I know they recently acquired a payments platform.
That's a great observation.
Yeah?
Acquisitions can be a powerful tool for gaining market share and accessing new technologies.
Right.
SoFi's acquisition of a payments platform certainly signals their ambition to expand their reach and capabilities.
Like that.
However, acquisitions also come with inherent risks.
Like what?
Integration challenges, cultural clashes,
Okay.
and overpaying for assets are all potential pitfalls.
Right.
It will be interesting to observe how SoFi handles this acquisition and how it impacts their overall strategy.
All right, so we've got this ambitious company, impressive growth, some cautionary notes from analysts, and a recent acquisition that could be a game changer. Yeah. What's your take on SoFi's long-term prospects? Where do you see them in 5 years, 10 years?
Predicting the future is always a challenge,
Right.
especially in such a dynamic industry.
Yeah.
However, based on what we've seen so far,
Mm-hmm.
I believe SoFi has the potential to become a major player in the financial services industry.
Okay.
They have a strong brand, a loyal customer base, a talented team,
Yeah.
and they're addressing a real need in the market
Right.
by providing accessible, user-friendly financial products and services.
They're definitely tapping into a growing demand for alternative financial solutions.
Yeah.
But you're right.
Yeah.
Nothing is guaranteed.
Exactly.
Yeah.
Their success hinges on their ability to continue innovating,
Right.
managing risk effectively, and navigating the competitive landscape with agility.
For sure.
It's a high-stakes game.
And a fascinating one to watch unfold.
Absolutely.
Before we wrap up our deep dive into SoFi Technologies,
Yeah.
I want to leave you with one final thought to ponder. Remember how we talked about their ambition to be a one-stop shop for all your financial needs?
Yes, their goal of creating a comprehensive financial platform.
Well, think about the implications of that.
Okay.
They're collecting a vast amount of data about their users.
Right.
Data about spending habits, investment choices, insurance needs, even career aspirations.
It's a goldmine of insights offering incredible potential for personalization, targeted marketing, and even the development of new products and services. However, this data also raises crucial questions about privacy and security.
That's a crucial point.
Yeah.
How is SoFi using this data? Are they sharing it with third parties? And what measures are they taking to safeguard it from breaches? These are questions every SoFi user should be asking. And honestly, it's relevant for any company operating in our digital world today.
Absolutely. Data is the new currency, and as consumers, we need to be more aware of how our information is being collected, utilized, and protected.
It's about being informed and empowered, right? Understanding the trade-offs we make when we opt for these convenient, personalized services.
You hit the nail on the head. And it all comes back to having open and honest conversations about the implications of this data-driven world we live in.
What's really striking to me is how SoFi's story is a microcosm of larger trends we're seeing across the entire financial industry.
It really is. We're witnessing this incredible convergence of technology, consumer expectations, and regulatory pressures, all shaping the future of finance.
It's like a perfect storm is brewing. And SoFi is right in the middle of it, trying to navigate the waves and stay ahead of the curve. But they're not alone in this, are they? There are so many other fintech companies out there, each with their own approach and niche.
Absolutely. We've got companies focused on payments, lending, investing, even cryptocurrency. It's a dynamic and vibrant ecosystem brimming with innovation and disruption.
Which is exciting for consumers.
Yeah.
Because it means more choices and potentially better services. But it also presents challenges for regulators who are trying to maintain stability and protect consumers in this rapidly changing landscape.
Exactly. Finding the right balance between fostering innovation and mitigating risk is a constant tightrope walk, and that's a walk that will continue for the foreseeable future. The financial industry is in constant flux, making it almost impossible to predict where it will land.
But one thing is certain. It's going to be an interesting journey.
Without a doubt. And it's a journey that we, as informed and engaged individuals, need to actively participate in.
I couldn't agree more. We need to stay informed, ask tough questions, and demand transparency from the companies we entrust with our financial lives.
It's about taking ownership of our financial well-being and shaping the future of finance in a way that benefits everyone.
Well said. And on that note, it's time to wrap up our deep dive into SoFi Technologies and the evolving world of fintech. Thank you for joining us on this journey. We hope you've gained valuable insights and maybe even a few new perspectives along the way.
If you're feeling inspired to learn more, we encourage you to do your own research, explore the resources we've mentioned, and most importantly, never stop asking questions.
Because that's what the deep dive is all about. Until next time, stay curious, stay informed, and keep diving deep.